Hello everyone, I'm Ankit and you're watching StudyIQ IS English channel. Now, irrespective of the news source or news medium that you follow, the chances is that you've opened a website today, you must have seen this kind of a news. This news actually highlights that after conclusion of the meeting of RBI's Monetary Policy Committee, the RBI governor has announced a 25 basis point reduction in the policy rate, also known as repo rate. So how will it affect India's economy? What are the reasons based on which RBI has reduced the policy rate? We'll try to understand in our today's discussion. But what we have to remember that this reduction in policy rate in April is actually the second reduction in the last few months, because RBI started this policy of reduction in repo rate from February 2025 onwards, after it has raised repo rate in 2023 and it has paused any changes in the repo rate in the following months. Because why? Because inflation in Indian economy was too much, and in this inflation was primarily driven by food inflation. Now we understand RBI's main responsibility is what? It is to control inflation. So after it has been able to control inflation, now to promote economic growth, RBI has started to reduce policy rate. Now, the context of this discussion is that the 6-member Monetary Policy Committee has actually decided to cut the repo rate by 25 basis points in its bi-monthly policy review. Now, the rate setting panel, what you have to remember, has also changed the monetary policy stance from neutral to accommodative. So, what is monetary policy stance? What does different kind of a stance means? We'll also try to understand today. Now, this policy move by RBI, it reflects central bank's response to what is known as evolving economic condition. Now, what are these evolving economic conditions? Also, I'll tell you in our today's discussion. And based on this evolving economic conditions, RBI has fostered its commitment towards promoting growth while successfully managing inflation. So based on this few circumstances has the RBI made its decision to reduce the policy rate. Now, from this context, many things become important. That is Monetary Policy Committee, reduction in repo rate and its implication, and also monetary policy stance, and also the evolving economic conditions. So these four topics we'll try to understand in our today's video. Now, first let us start our today's discussion by understanding the Monetary Policy Committee. Now, the responsibility of deciding whether to increase or reduce the policy rate or repo rate, this is the task given to Monetary Policy Committee. Earlier, it was only the RBI governor who used to make this decision. But now, to make this decision, there is a 6-member Monetary Policy Committee which is formed as per the provisions of RBI Act 1934. Now, this 6-member Monetary Policy Committee, it includes 3 members from RBI and 3 nominees by the central government. Now, 3 members of RBI includes RBI governor, who acts as a chairman, deputy governor of RBI, who is in charge of monetary policy, and 1 officer of the RBI who is appointed by the central board of RBI. And in addition to that, 3 persons who are experts in the fields of banking and monetary policy, they are appointed by the central government of India to this Monetary Policy Committee. And this committee then decides by majority what should be the policy rate in coming times. Understand? Now you have to understand that RBI governor is in charge of India's central bank. So to make things easier for RBI and RBI governor, the government has also added a provision in the RBI Act 1934. That is, in case of tying of votes, that is, if 3 members decide one thing and other 3 members decide another thing, so whose decision will prevail in that case? So for that matter, the RBI governor has the second or a casting vote. That is, whatever RBI governor says in case of tie of votes, that decision will prevail. Now, the duration or how many times does this committee meet? Legally, this committee is required to meet at least 4 times every year. But in reality, we have seen that this committee meets once every 2 months. That is why it is called as bi-monthly policy review. Now, the objective of this committee is twofold. First objective, that this committee determines policy repo rate while maintaining price stability. And to maintain price stability, there is a obligation of the RBI Monetary Policy Committee to keep the inflation levels at the rate of 4% plus minus 2% of what? Of consumer price index. So theoretically, the range within which the inflation has to be controlled by RBI is between 2% to 6% of consumer price index. So this is the primary objective of the Monetary Policy Committee, that is to ensure price stability, otherwise known as controlling the inflation. So after this primary objective has been fulfilled, that it has been now currently, then RBI also considers to promote economic growth. So therefore, this is the secondary objective of the Monetary Policy Committee, that first it has to target and it has to control inflation, and after that it can consider many circumstances and many moves in order to promote the economy. So understand. Now let us move to the reasons why did actually RBI cut the repo rate. Now there is a very big uncertainty that is going around in the global economy, that is the decision made by US President Donald Trump to impose tariffs or custom duties on any imports made in the US. So naturally, because of levying of this tariff on imports coming into US, you understand this will lead to inflation in the US market. And whenever there is a increased inflation in any economy, it leads to reduction in spending by people, and also ultimately it can lead to lower growth of the US economy. And you understand US is the world's biggest economy. So in case of lowering of growth in US economy, naturally it would affect every other economy, including Indian economy. So this is the primary driving factor behind the RBI's move to reduce policy rates. Also in recent times, particularly last 1.5 and 2 years, we have seen Indian economy was facing the problems of inflation, which was primarily driven by inflation in food items. But now, because of many circumstances, because of good monsoon last year, we have seen that the food inflation levels have cooled down, allowing the overall CPI to be in the range which actually is determined by the RBI, that is between the levels of 4% and plus minus 2% of the consumer price index. So these two factors, that is the policy uncertainty in the US as well as controlling of inflation in India, has allowed RBI to reduce this repo rate. And what is the consequences of this reduction in repo rate? That automatically it will make borrowing or extension of loans by the banks cheaper. So what will be the benefit of reducing the cost of loan is that it will lead of increased spending and investment by people. So that, because you can understand, if the loans become cheaper, it will be easier for you to get loans, and you will get loans and use it to buy automobiles, you will use it to buy houses. So naturally it will promote spending by people, and also it will lead to increased investment by the companies, because whenever your spending increases, demands for goods and services increases, and companies, in order to fulfill this increased demand of goods and services, invest in their existing factories by addition of capacity, and they also set up newer capacities and factories. So this overall will promote investment levels in the economy. And all of this ultimately will culminate into more job creation and economic growth promotion. Understand? Now, how will it affect consumers like you and I? Let us try to understand this. Now, any reduction in policy rate, you understand policy rate also determines how much or what will be the levels of interest that the banks will charge on the loans that you take from the banks, right? Because loans and the amount of interest rates, these are determined by two factors. First is external benchmark lending rates, and we understand repo rate is one of the external benchmarks which the banks use to calculate their lending rates. Similarly, there is also marginal cost-based lending rates, which also considers the levels of repo rate. So as repo rate has reduced, both external benchmark lending rate as well as MCLR will reduce, and therefore banks will charge now less amount of interest for any loans that you take from the banks. So naturally, people who have taken the loans earlier, their EMI payments will also fall, which will lead to higher disposable income with people. And also, because of reduced interest rates on loans that are linked to marginal cost-based lending rate, overall loans that are taken from the banks reduces. So this was one good side or what good consequences of reduction in repo rate. Now let us understand what may be the other consequences. Now you understand there is a section of people in India, particularly senior citizens, who love to deposit their money in form of fixed deposits with the banks, because you understand this is their primary source of income. So those people, particularly the ones who have an inclination towards fixed deposits in the banks, they stand to lose out because of this reduction in repo rate, because reduction in repo rate also reduces the deposit rates that the bank offered on your deposits. Similarly, it will reduce the RD rates, it will reduce the fixed deposit rates. So people, they will reduce or they will witness reduction in their interest earned on their savings, on their fixed deposits, making it a less attractive avenues for individuals like senior citizens to deposit their money in fixed deposit and save this money. And otherwise, it will lead to overall reduction in EMI for home loans, for vehicle loans that you take from the banks, making it easier for individuals to repay their debts. Also, as a long-term consequences, you can understand lowering of repo rate can also lead to higher inflation, which is a consequences of increased money supply and lowering of interest rates. But this is a long-term consequences. The immediate consequences will be reduction in your EMI outgo for your home loans, for vehicle loans, or any kind of loans that you might have taken for the bank. And on the other side, it will also reduce the deposit rates that you earn after depositing the money in fixed deposits and recurring deposits. Right? Now RBI, it makes this decision to cut the repo rate depending on various factors. First, I told you the most important factor in this regard is the levels of inflation. If the levels of inflation is controlled, RBI feels free to reduce the repo rate. Similarly, if RBI wants to promote growth, it reduces repo rate. And also global economic trends that I've already told you, because of fears of inflation in US, and as a result of which the US might witness economic slowdown and even recession, thereby it might affect Indian economy. So to deal with those effects, RBI has already reduced its repo rate. Now another important fact that has appeared in the article is the change in monetary policy stance. So what is monetary policy stance? Let us try to understand this. We have to understand RBI made a decision today of reduction in repo rate. But what decision or what will be the directions of RBI decision in coming future, that is highlighted by the RBI in terms of its monetary policy stance. Now we understand right now RBI is in a mood to reduce its repo rate. So going forward, people are expecting RBI to reduce this repo rate, and RBI has indeed highlighted by changing its monetary policy stance. Earlier, this monetary policy stance was neutral. Now RBI said that its stance, that is its outlook for going decision forward, will be the accommodative stance. Now accommodative stance, it means that RBI is likely to follow easy monetary policy. That is geared towards what? That is geared towards stimulating the economy through softer interest rates, which means by following accommodative interest stance or accommodative monetary policy stance, RBI wants to reduce the repo rate going future so as to increase the what? Increase the money supply. So this is what accommodative stance means. So it does not mean that RBI will surely reduce repo rate, but it means that RBI is looking to reduce repo rate, allowing or considering the conditions of then allows the RBI to do so. Now on the opposite of accommodative stance is what is called as tightening stance. You understand, accommodative means following easy money policy, that is reducing of repo rate and increasing of money supply. So opposite is true in case of tightening. Now in case of tightening, RBI follows what? Contractionary money supply, which means in case of tightening of stance of RBI, it is likely that going forward RBI will increase the repo rate, and it will be done so in order to restrain spending and curb economic activity so as to allow RBI to retain or rein down the increased levels of inflation. So this kind of tightening policy is actually adopted by RBI whenever the inflation levels in the economy is high, and you understand the primary responsibility of RBI is what? To control the levels of inflation. And in between these two stances is what is called as neutral stance. Now when does RBI follow neutral stance? Especially when the policy is quite uncertain or the economic conditions in the country is quite uncertain. So RBI does not know whether going forward will it increase the repo rate or will it decrease the repo rate, which means will it increase the money supply or will it not increase the money supply. RBI is not sure of it, so RBI adopts the neutral stance. And neutral stance, it typically is associated with the state of economy which neither calls for stimulating economic activity nor it calls for controlling inflation. So when RBI is not sure, it adopts neutral stance. Now earlier we understood during this time when RBI was watching the inflation levels in our country, and you understand RBI was not sure whether it was successfully able to control the inflation. So here RBI had adopted the neutral stance. Sorry for the spelling. It adopted neutral stance, which means here RBI could have technically raised repo rate or it could have reduced repo rate, allowing it to promote economic growth or allowing it to control inflation. Right. But now in 2022 April, what RBI did, that it adopted a tightening stance of monetary policy, which means that going forward in these months, RBI did what? It increased repo rate. So in order to what? In order to control inflation. Now we understand the inflation levels have been controlled. So RBI has changed its monetary policy stance here. Now it has become what? It has become accommodative, which means going forward RBI is looking to what? Reduce repo rate, which will promote what? Which will promote economic growth. Understand? So this is what the stance of monetary policies. Stance of monetary policy means that going forward, this will be the outlook or direction of monetary policy decisions by the RBI. That RBI said that it is looking to follow accommodative monetary policy, which means going forward, it is looking to reduce repo rate, and the intention of this reduction of repo rate or intention of this accommodative policy is to promote levels of economic growth in India. Understood? So this was all for our today's discussion. And also I'll try to give you a homework. Please try to solve this PYQ of 2020. What would happen if RBI decides to follow the expansionist monetary policy, right? So please let me know the correct answer in the comment section, and please also do not forget to subscribe to our channel in case if you want to watch such similar informative videos. So I'll take your permission. Please have a very good day.